What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is March 30th, 2022, only one day left until month end. Today we're going to talk about the price action in the indices. I am recording this video a little bit later today. I was doing some scanning, some back testing work before putting out this video. So I'll also talk through some stocks that I'm watching heading into the rest of the week. Before we do that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. Do not YOLO your entire account to any one of my trades, your trades, or anyone's trades. Alrighty, let's dive in. So today, we've been talking about this the past couple of days, where the market has just been, moving to the upside in really just a beautiful fashion. We have the short covering rally, we have the rebalancing rally, Russia and Ukraine getting better, etc., etc. Things definitely got a little bit carried away to the upside in very short order. So today was our first pullback day. The S&P 500 was down 0.62%. We had the Nasdaq QQQ finishing down 1.1%. IWM small caps, one of our losers, down 2.01%. Dow Jones down just 0.24%, lagging to both the upside and the downside. And we have the ARK Innovation ETF was our biggest loser for today, down 3.8%. In terms of the closing range, you can see it was a very mixed bag. We had the Dow Jones and the S&P 500 closing around the middle of their range, everything else towards the lower end of it. Volatility actually picked up for the first time in quite a while, and we had negative breadth across the board. We actually had 0% advancers in ARK, and the small caps only had 16% advancers. My trend model actually flipped from a +3 to a +1 today. All right, let's take a look at the hood here. You can see the semiconductors got pretty much walloped today. We'll have to take a look at Nvidia. We'll take a look at Micron as well that reported earnings. But yeah, that group definitely looks like there was some selling there. The two juggernauts that have just remained very strong, Apple and Tesla, they did pull back today, but these are just like little baby pullbacks. Same thing with Microsoft, same thing with Google. We can see energy was bid today. And we can see that, there was some mixed action in the healthcare stocks. Sectors, check it out. So what finished out positive? We had utilities finishing positive. Utilities are now in our top momentum slot. So that is definitely a bit more defensive. We had healthcare finish basically flat at 0.2%. Oh, wow. So energy was our big outperformer, up 1.16%. That really shows you we have almost like these two different baskets. One is the risk off basket, and that's like the utilities, that's energy, gold miners, etc. And the other basket's the more risk on stuff. That's like the growth stocks, cannabis stocks, meme stocks, that sort of thing. All right, let's take a look at style factors. High div, low vol was the only green style factor. And what was the weakest? We had momentum stocks down 1.17%, growth down over 1%, and cyclicals. Oh yeah, cyclicals and high beta down 2% and 1.73%. So definitely a risk-off look here in terms of the sectors as well as the style factors. Quarter end rebalancing, we only have one more day left till the end of the quarter. So tomorrow's the big day where everyone has to close out their books, likely statements going out. And I would not be surprised if into quarter end there's just like a blow-off sequence where it's just like, all right, let's rip this thing into the end of the quarter. Who really knows? But it definitely seems like there is a bit of strategy that goes into these quarter ends. And who knows? Maybe there's some funds that they do all their buying into the end of the quarter, prop things up a little bit, make everyone look good, and maybe they wait for some of their selling to the beginning of the quarter. We'll have to see what happens. And then one other thing I just thought was pretty interesting when I was doing some reading tonight. This is from the Marketeer. They put out some good charts every once in a while, and you can see here put hate is back. So they say here the crowd loaded up on puts at recent lows, and all of that premium evaporated as both direction and volatility has gone against the late hedgers. We are now reaching the lowest levels for the put to call ratio since the squeeze began. So many PMs, portfolio managers, have explained that hedges only cost money. Over the past days, we are getting closer. So the market makes this insane rally higher, pretty much like a straight line parabolic move up. The puts call ratio really starts falling. So just quick observation here. Look at what a healthy trending market looks like. You'll see you're kind of moving on like this 45-degree angle, slow and steady, little pullbacks along the way. what we've seen year to date, this is like pretty wonky. This doesn't really look like, oh, this is a great trend in the market. It looks more like a sideways market where it's just like really jagged and like, let's go up 8% and then down 9 and then up 10 and then down 7. Like it's just very odd, not really trending. Yeah, this puts call ratio is heading lower. And then of course our seasonality. Seasonality is still a tailwind for the market. We are entering April. This tends to be a good month for equities. All right, let's take a look here. Let's go to our indices. So we have S&P 500. So where are we now? And the market, again, it was down slightly today, down 0.62% for SPY. But when you look at this chart, there really hasn't been any technical damage inflicted on the market. We put in a hammer candle. We did not close on the lows. At one point, the market was down, I think, just over 1% for the S&P 500. At this point, all this really is a pullback to the 5-day exponential moving average. So if you're looking for lower prices, the first hurdle that has to be cleared is this 5-day EMA. Keep in mind, we have a new developing value area for April. That is going to be lit up in just 2 trading sessions. And look at this, in the overnight session, we are up 0.11%. Taking a look here, let's actually check out the 5-minute chart. I was looking at this earlier. So yeah, we made it all the way through this daily value area. It's pretty much like everyone that bought yesterday, all those latecomers, all those chasers went underwater, and then we just kind of ripped into the close, and here we are now. So some mean reversion going on. Let's take a look at our Nasdaq. The Nasdaq is up 0.26% in the after hour, so this is pretty significant here. Take a look, we actually closed below that 200-day moving average. So this is a key technical level, and we cleared it, but could this just be a fake out, and could the Nasdaq be heading lower? Curious to see how that plays out. Again, we have that 5-day EMA that is still below us. Russell 2000, now this one looks kind of weak here. So you can see amazing breakout candle. Oh my gosh, this is awesome. Great move for the Russell 2000. And now today we gave back pretty much all of it. Now we're retesting the upper end of this 7-day range. And here we are, we're only up 0.03% in the after hour. So to me, it's pretty clear these small caps, they're definitely the weak link out of all of these indices. And then our Dow Jones, the dogs of the Dow, this actually held above this monthly point of control. And you can see the Dow Jones put in a bit of a doji candle. So really not that bad. All right, let's take a look here. In terms of trading, again, I didn't do any trades today. You know, I've been trying to just keep it cool and really just waiting for the right moment to strike. Yesterday, I went long some volatility, and today, you know, was really just observing, not really doing all that much, because I want to make sure that I'm using my bullets at very opportune moments. Still in about 80% cash. All right, let's take a look. Speaking of using bullets at the right moment, let's take a look at some interesting charts here. So we have Costco. This name actually pushed out to new highs. And look at this one on the weekly chart. So Costco definitely looking good here, but at this point, trying to get an entry in it, like a fresh entry, we're at this R2 extension away from this monthly value area, so it is a little bit tough. If the market has a pullback though, the 20-day moving average is all the way down here. This could definitely be one that I watch pretty closely if and when that pullback comes. LAC, this is a lithium name, and I am noticing that a lot of these materials names, you know, of course, energy's been very strong. These like inflation hedge stocks, they're not really going anywhere. They're having some sharp pullbacks now, and this, I think, tells the story. We had a big rally here on high volume, but you can see there was some selling of the top here. So this is another one. Could this one work out for a wick play? If we trade inside the wick from today, you know, you make a move to the upside, certainly a possibility. But again, this one, look at this breakout from the monthly value area. This one might need some time to cool off a little bit. LAC, another one looking interesting. We have Kroger, which reported good earnings, and now we've consolidated and we've made it pretty much all the way back to this 20-day simple moving average. The one that I think looks the best to me is this TECK, Tech. And look at this one. It's not incredibly overextended. Like, we had a nice breakout from this monthly value area, but we've been consolidating ever since. And you can see this developing value area for April, we're pretty much right at the top of that here. But I want to make sure I don't get too wrapped up in some of these inflation hedge stocks after they've had a crazy run like this. But yeah, definitely looks interesting. And let's pull up just one more. This is more so in like the fresh IPO group. This is Bros. And look at this one. High volume on this breakout from this monthly value area. And then also high volume on this sell-off today. So we actually tried to move to a new swing high here and we failed there, and sellers stepped in. So definitely a lot to look at heading into tomorrow. But to be honest, like the market's still very overbought as a whole. So I want to let the dust settle a bit, see how things go. All right, let's take a look at our options order flow. And we will take a look at today's combined flows. Let's see what we got. And we have Tesla, Amazon, the Qs, we have SPY. Tesla, of course, is in our top slot. It put in a crazy day where it had like 4.8 billion of call flow or of option flow, excuse me. Okay, so only 2.3 billion for Tesla today. Let's take a look here. One thing that I noticed is when I was looking at the intraday put to call ratio, definitely seeing some signs of complacency today. And look at this, everyone is buying the dip. They're like, yes, we finally got a shallow dip to buy. Let's see, Tesla, same thing. It's funny how the psychology changes so quickly. Amazon, a lot of puts going up. Let's see SPY. Okay, so this is interesting. Pretty much a mixed bag. And then let's check out one more. Let's check out Nvidia. Okay, so a lot of dip buying in Nvidia. This will be the last one that we go through before we wrap up here. Nvidia and the semiconductors ETF. Yeah, we closed. Wow, so for the semis, this kind of looks like it could be a turning point here, because not only did we lose like yesterday's candle, it's not like, oh yeah, we now we're trading below the open from the other day. Like we just completely closed below that entire day. So I could really see this being like that day where people are just like, man, why did I buy so extended? But we're gonna have to see again. Tomorrow is quarter end. Let's see if we get some fireworks into the end of the quarter, team. All right, that about does it for this market recap video. Hope you all had an awesome trading session. I'll see you all tomorrow.